Don't forget, you can reach the latest episode of Potomac Watch anytime. Just ask your smart speaker, play the Opinion Potomac Watch podcast.
From the opinion pages of the Wall Street Journal, this is Potomac Watch.
Welcome back. I'm Kim Strassel. I'm here with Kate Batchelder-Odell and Alicia Finley. Kate, just one last quick question on this banking situation. A little bit of news coming out of Washington from the president. We've had politicians all over the map on what the congressional response should be here. And now in walks President Biden, and he is calling on Congress to pass legislation that would put bank managers on the hook when banks fail. And I'll just read the key section here. The statement says, when banks fail due to mismanagement and excessive risk-taking, it should be easier for regulators to claw back compensation from executives, to impose civil penalties, and to ban executives from working in the industry again, end quote. Look, I get that there's no question that the banks look to have failed to adequately manage their risk here, but it strikes me that this, much as we kind of saw in 2008, Kate, it's kind of a call for federal authorities to ignore their own role in this, namely banking regimes set up under the Dodd-Frank law that encourage banks to invest in exactly the kind of securities that they're now getting punished for given higher interest rates. And also, by the way, those higher interest rates brought on by excessive government spending and poor monetary policy. Is this a bill that is just going to do anything or matter if it were to pass, or is just a chance for everyone to pile on bank execs?
Yeah, Kim, I was really struck by the phrase excessive risk-taking. Pat Toomey, as Leisha mentioned, was on CNBC earlier this week putting on a clinic about how the Fed forced banks up the risk curve with their policies. So that is fundamentally part of the story of how we got here. Now, I'd love to say this is pure misdirection, and it certainly looks like it, but to bail out the banks and then roll out this demagoguery about bank managers looks designed to compromise the public's confidence in capitalism. Perhaps that's a little too cynical on my part, but it simply doesn't look like they want to talk about the underlying realities here. I mean, Toomey was saying, raised a good point. He knows a lot about this from being on banking, but bank regulators are, quote, nearly omnipotent. They have a lot of insight into what's going on at banks, and they didn't see any of this coming. So I think Biden administration doesn't want to have that conversation, and so they are throwing up whatever they can think of.
Yeah. And by the way, we embrace cynicism here on the Potomac Watch podcast. So that's good. Let's change gears here real quick. Sanofi, which is a major European drug maker, says that it plans to make a 78% list price reduction on Lantus, which is the company's most widely used insulin in the U.S., and a 70% cut on another product that it has, an insulin product, starting early next year. Sanofi said that its Lantus costs, out-of-pocket costs, would be capped at $35 a patient a month. And its head of U.S. General Medicine was quoted as saying, no one should struggle to pay for their insulin. And this is one of the largest makers of insulin, but also we had Eli Lilly recently and Novo Nordisk both say they would slash insulin prices. Alicia, Democrats have been all over this issue of late, pressuring drug makers to cut insulin costs. The president banged on about it in the State of the Union. Democrats even resorted to a bit of a warning and coercion last year in their Inflation Reduction Act, where they included a provision capping out-of-pocket insulin payments for Medicare patients. But we had a really good editorial recently, Alicia, pointing out that this is really kind of pure fiction, this line. Most people aren't actually struggling to pay for their insulin. Can you tell us what's really going on?
So in actuality, about 3 out of 4 people already pay less than $35 for their insulin. What's going on is this is a somewhat wonky issue, but what happens is insulin makers have been raising their list prices, which is essentially what the top line price without other rebates and discounts. And they negotiate these rebates with pharmaceutical benefit managers that work with insurers. And the rebates from the insulin makers to the insurers actually dramatically reduce the cost to the insurers. These rebates are actually ended up being spread across all insurance customers and help reduce premiums. So insulin costs, the top line price actually has increased in recent years, but the net price that's actually paid is actually pretty much flat. The people who really get harmed by this gap are the people who don't have insurance and have to pay out of pocket for insulin, or people who have very high deductibles. Now, increasingly, insurers are offering to cover insulin at low copays below the deductible because of the high price. These list prices can actually, discourage people from actually using the drug and make it. And so there's actually a health benefit for making this available below the deductible limit. And Kate has written a bunch on this over the years, but it's just a fiction that insulin prices have been increasing.
Yeah, I mean, it's fascinating, everything you just said, because it is not what you ever hear coming out of Washington. To listen to the president, most Americans are struggling to pay their insulin costs. Speaking of those politicians, the drug makers understand that they are on the political menu here, and they are responding to pressure that you're getting from a lot of these high profile Democrats, including these kind of threats. That was a warning shot back in the Inflation Reduction Act. We can do this with government Medicare prices, and, we're going to come after you in some other way unless you get on board with our agenda. But as we all know, especially, and we talk about here a lot on this podcast, when government wanders into markets to artificially set prices or caps on products, things rarely turned out as planned. There are usually some sort of unexpected consequences or market distortions. So now we've got these drug makers responding to this political pressure, and they're slashing prices for one drug. But what do you see happening here? I mean, what could be some of those unexpected consequences and fallout from this move?
Right, Kim. So to Alicia's point, the high prices that a few people do pay for insulin is largely a curiosity in how we run insurance, not the list price of the drug. Basically, if Congress were to set a $35 out-of-pocket cap on the drug, as they are threatening to do, and as most companies are already trying to move toward a model where most people get that anyway, the difference will be buried among the drug supply chain. The drug makers will try to stick it on the insurers or back and forth. But I think there are reasons to worry about this for two reasons. One is that it may send a signal to investors that diabetes is not a good drug category to invest in because it is too easy a political target. Joe Biden has been talking about insulin specifically for months and uses it as a convenient political example because it has some dysfunction and because it's a drug that a lot of Americans need. So it makes for what he thinks is a good political narrative. But I worry about sending capital out of those categories, out of better insulins that control blood sugar better, out of other blood sugar medicines or diabetes devices, etc. But I think the even bigger risk here, Kim, is that what the Biden administration is doing is not limited to insulin. We saw in the Inflation Reduction Act that the Biden administration wants to control the price of and access to all new drugs. The drugs that really should give everyone pause is the ones that Alicia has written on so fluidly, which are, for instance, an Alzheimer's drug, a new drug that is going to be expensive because the cost of developing a drug like that is so astronomical and includes the drugs that never make it through testing and development. So the drugs that the Biden administration wants to control really are new in class drugs in areas where there may be no other treatments. We have already seen the Inflation Reduction Act cause some companies to abandon some cancer drugs that no longer make sense under the price ceilings that the Biden administration is setting. So it's really not just about insulin, though the consequences may be negative there. This is really about all drug development and whether drug makers can get a return on their investment.
Yeah, and the victims here are going to be an American population that's getting older and is going to need those drugs too. Thank you, Kate. Thank you, Alicia. We thank our listeners. We remind you that we are here every weekday. We'll be back on Monday. You can email us at pwpodcast@wsj.com. And if you like this show, please hit the subscribe button.